Welcome back. You're watching IndianOpen right here on BloombergQuint Live. Asia as a pocket is trading extremely weak, with regards to the effect of the coronavirus and what that could do for the investor sentiment that seems to be having its way down. China is down about 1.3%. You've got Hang Seng down more than 1%, and Japan too is trading with cuts of about 0.6%. For the SGX Nifty, we're trading absolutely flat. But again, the earnings momentum will take center stage in today's session. It's not about the index today. You've got larger names like Larsen and Toubro that would probably drive the sentiment on the index as well. Good morning, Nivesh.
Yeah, good morning, Devina. That sums it up really. The sentiment with L&T's numbers and nothing too bad, but yeah, not quite the best. And Axis Bank internals maybe leave a bit of an impact on the sentiment too. Though I must say the Bank Nifty is very close to some key support levels as well on the RSI front, and the Nifty is at the 50-day moving average. So
100-day moving average for the Nifty Bank. Though it's still a few hundred points away.
A few hundred points away,
but that's the next one, because we've really, at a very sharp pace, breached the 50 DMA, and it's long gone behind.
Yeah.
And now the next one is the 100 DMA.
Yeah, and even on the RSI front, it's very close by to support levels, the Nifty Bank that is. So maybe there's some intraday support, but the results don't quite inspire confidence. Today though, as I said in the trade setup, today is a day of some very interesting results, because most of which are expected to deliver good numbers. So we actually have, for a change, a good day on the results front.
And expectations, let's see what the reality turns out to be. But also let's take a look at what's been happening in the futures and options space. Navneet is joining us to give us a setup. Navneet, good morning.
Good morning to both of you. Well, on every rebound, you're seeing some selling pressure coming by, and that's exactly what happened in yesterday's trade. We opened in the positive, but there was selling and profit booking, which came in around those levels. Nifty at futures at 12,145, and in fact, we breached the 50 DMA yesterday, but the closing came above that. So, of course, that remains a very key level to monitor. In terms of level for the day, at least you should watch out 12,000, which is a big support on the downside, and the 20 DMA 12,200 on the upside could act as a resistance in case if there is any sort of rebound. No fresh positions, however, were seen for Nifty futures. It's the Bank Nifty which is weighing over all the private banking stocks. So for Nifty Bank, open interest was up by about 8%. And yes, volatility is back in this market. While last week throughout, India VIX was at 14 level. This week, just in last 3 sessions, you've seen India VIX surging about 15 to 16%. In terms of options data, the PCR has been falling, and now it's fallen to level of 1. Remember, that's a key monitorable in terms of internals as well. So watch out. Nifty PCR at level of 1 versus 1.07, which was seen in the previous trading session. And that's on account of heavy call riding, which is coming into the system. In terms of distribution now for today's expiry, today is also the weekly options expiry day. You've got the 12,300 and the 12,200 call strikes, which are sitting with maximum open interest, while on the put side, 12,000 and 12,100 strike will be in focus. In yesterday's session, you did see a lot of call riding coming in for these out-of-the-money strikes. So even at the money, 12,100 call added about 10.5 lakh shares, while the put riders of 12,200 and 300 strike ran for cover. Talking about the individual stocks, then there were a lot of stocks which were moving around. You had something like PFC, which has been underperforming. Finally, in a weak session like yesterday, saw a bit of rebound. Long positions were seen, and it was the PSUs actually which were in focus. So Oil India witnessed fresh short positions. You also had Coal India, which was down. That also witnessed short positions. And Kotak Mahindra Bank saw fresh shorting coming by. The stock was down by nearly 1.5 to 2%. And finally, you have the domestic institutions which have been selling in the cash market for last 9 sessions. And there is heavy shorting which is coming from the foreign institution desk as well. Look at this, 13,000 contracts on the index future side. Even if you look at the index options data, there was heavy call riding. And even on the put long side, they bought about closer to 19,000 contracts. So in case if there is any sort of rebound, there is a good case for short covering as well. With that, it's back to you guys.
Right, Navneet, thanks very much for that. Focus also shifts on Axis Bank and what kind of reaction we can anticipate for the stock as it opens up for trade in the back of its results. Slippages, with the big bright red spot in the results this time around. Ravikant Anand Bhat, he's the banking analyst at India. Nivesh is joining us on the phone line. Ravikant, what did you make of Axis Bank's numbers?
Well, it was a minor beat on the top line, but I mean, if I were to take away some of the one-offs, because both on the especially on the other income, certain items like trading profits tend to be volatile. So I mean, let's say the earnings were kind of in line with what broadly in line with what we're expecting, but as you said, the bright red spot was obviously the slippages, which was much higher than what we had estimated. Even after taking away the known stressed account, still the corporate slippages appear on the higher side. although the retail slippages were stable. So I think this will kind of weigh down on the stock. This is something which we obviously have been tracking and have been concerned about, which is why we aren't one of the more bullish brokerages on the stock. We have had an accumulated rating on it. I think this is going to keep the pressure on the stock for some time, so for some more time now.
You reckon it will start lower today, Ravikant, because it's corrected a bit in the run-up to the results?
Yeah, it did correct, and even in yesterday's trading session, although it did close marginally lower, but I think it should open lower today.
Do you feel that the management's commentary with regarding the loan growth, which could be 5 to 7% higher than industry, is a positive takeaway from the con call?
No, but I think that's been a reiteration. They have been saying that for a while, been growing better than industry. Now we can grow 5 to 10% higher. I mean, the industry is now much lower compared to what it was earlier. So we have seen a broader weakness out there. So I think compared to that, the domestic retail advances growth of 18% does look quite good. But then, if you were to look at their peers, I think ICICI Bank has been growing as well. And HDFC Bank, which now is the largest private bank, is growing in high teens. So I think loan growth is broadly matching what their peers are doing. So I won't. I won't concede some additional groundings for that.
Okay. One last question, Ravikant. Do you track RBL Bank, and did you see any green shoots in those numbers?
Yes, we do track RBL Bank. I mean, we like the stock. We have a buyer rating on the stock. Green shoots in the sense, I think the core earnings numbers was quite good. I mean, in fact, they were bang on the money as far as our estimates are concerned. But I think the good part was they haven't expanded the stress list, and secondly, the slippages are flowing through it. So that's one good thing. The only other item that I would look out for is how the momentum itself picks up, because they had been in a consolidation mode and they are no longer growing at 35 or 40% plus that they were growing. They were consolidating on the corporate side, and therefore the growth had come off to around mid-20s. It's come off a little more during Q3. So I would really like to see the growth momentum picking up a bit for them. And a bit of red flags that were there on the microfinance side. But otherwise, I think the numbers are fine. So RBL should do well today. We like the stock. We have a buy.
Okay, Ravikant, we'll leave it at that. Thank you very much. So expect pressure on Axis Bank stock, while Ravikant saying they like an RBL Bank. Remember, Axis Bank, though, has already corrected ahead of numbers, but these slippages could be a big dampener. Parthiv Shah, director at TRACOM Stockbrokers, is joining us right now on the show as well. Parthiv, any key results that have struck your attention and you feel that it could actually land up being an opportunity if the stocks correct in today's session?
Good morning, Devin. Devin, I have a slightly contrarian view on Axis Bank. In fact, I like the numbers, and very frankly speaking, no doubt one would talk about the elevated slippages, but one also has to understand that 81% of the corporate slippages came from the already talked about double B and low graded book, which is not, I think, a very big surprise. And also out of the slippages number, 1100 crore also stems from the fact that they had even previously disclosed that DHFL bond portfolio, I think that's what has been slipped. So my sense is, I think if you look at the other brighter side, they have been growing their market share at a point in time where the overall lending is at credit growth is at 7% or even lower. These guys are growing at 18% in terms of the credit growth, and they are very selectively garnering better market share, quality market share, and which was evident from the fact that the NIMs were up. I think they are definitely doing a great job, and probably this cleanup might take a couple of quarters, post which I think the numbers would look a lot more resilient. So any sort of declines in Axis Bank, I think we would see this as an opportunity to buy this bank, not for a couple of quarters, but maybe for a couple of years, where we feel I think this can really compound wealth big time. Also talking about other numbers, I think Asian Paints, what we have seen is that it was a very, very challenging quarter. And the reason why we saw a very tepid revenue growth was evident from the fact that they tried to push the value segment, the economy segment of paints, which are costing 10-15% lower than the premium segment. And despite such huge challenging times, the decorative segment did grow by a lower single digit, but still at least there was a positive volume growth number. And again, we know for the fact that this quarter was also helped by the benign raw material prices, but going ahead, same might not be the case. But nonetheless, is a stock quoting at 50 times FY21 earnings. Any sort of declines here, I still believe the growth story is intact for longer horizon. So I think in quality companies, due to 1 or 2 quarters, if at all one sees any sort of 3 to 5% sort of a dip, I think we'll consider this as a buying opportunity for longer horizon.
Okay. Mind you, a clutch of other very important numbers that we'll watch out for as well, and we'll get to a research team to talk about all of those very important set of numbers. The only question that the street would have is that if indeed the banks see some support, would the likes of Kotak, etc., see some buying? Because, I mean, you know, we've seen the impact of slightly weaker than expected numbers on none other than Kotak Bank, right? It was at 1701 sometime in the month of January. From there, it's at 1585. 1 month, 7% for a bank like Kotak Bank is no mean feat. So if Kotak can do this, well, some of the others do. But yeah, the valuations are sky high, so maybe there's just a bit of reasoning down of valuations too.
Yeah, and I think that's what we saw in Polycab also yesterday when it fell about 8%. We'll talk about all of that and more, but also important to get in some more numbers that came out post-market hours in yesterday's session. You have smaller names like Credit Access, Grameen, Chavan Financial Services, what they did, as well as a few other stocks which are in the news. So we've got our team here with us. We've got Sameet, we've got Nikki and Shefali. Nikki, I'm going to start off with you first.
Yeah, a couple of stocks that we're looking at. First one would be Cipla, where US FTA has declared the Goa plant as official action initiated. This is not expected to have a material impact on the US business, given that the plant has exports to US, but then the Goa plant accounts overall for 2.5% of the consolidated revenue, and the plant, mind you, has received 12 observations in the past. Also, we're looking at Emami group of companies out there. The group overall is in talks to raise around 1,500 crore as NCDs through placement of NCDs, and is also in talks to sell the 40-bed hospital in Bhubaneswar for around 300 odd crore. This is a move to bring down the promoter's pledge and also to become a debt-free company. We're also looking at Piramal Enterprises, where the right issue has been oversubscribed by more than 1.5 times, more than 1 times, and the issue has closed on Jan 21st. We're also looking at a bunch of telecom companies, Vodafone, Idea for that matter. They've sought an exception from government to miss the January 23 deadline, though they've said that they're going to be complying with the AGR dues, but then they're going to be waiting in for a revised petition which will happen in next week, and post that the payments would kick in. MRF, where the company has partially commissioned the phase 1 of its greenfield unit in Gujarat. And last on the list, we're looking at V-Mart Retail, where PCA Asia Pacific has bought in 2.28 lakh shares in the counter overall.
All right, thanks a lot for that, Nikki. Let's talk about Credit Access, Grameen, and Chavan Financial Services. How did they do?
Well, starting with the Credit Access Grameen, they reported a net interest income growth of 35% on YY basis, and there was some impairment on the financial instruments to the tune of 55 crores. That's almost 5 times that they did in the same quarter last year, and up almost 95% on a sequential basis. So because of which the profit growth this time looked slightly lesser at just about 8%. The disbursements growth, however, continued to be strong at 69%, and there was some deterioration in the asset quality as well. The gross NPAs inched up by about 30 basis points on a sequential basis. So slightly mixed set of results from Credit Access Grameen. Ujjivan Small Finance Bank, their net interest income went up very strongly by 52%, and profit jumped by 98%. Provisioning was higher this time around at 30 crores versus 7 crores on a YY basis, and there was some deterioration in the asset quality. Gross NPAs went up to 0.95% versus 0.85%. And lastly, AU Small Finance Bank came out with the earnings. The earnings were very strong, with net interest income growing by 46%, profit almost doubling on a YY basis, and grew by 10% on a sequential basis. Gross NPAs as well came off to 1.88% versus 2.01 on a sequential basis. Net NPAs as well came off slightly by 10 basis points. Loan book grew strongly by 37%, and deposits also inched up by 63% on a YY basis. So very strong earnings from AU Small Finance Bank.
All right, Shefali, thanks very much for that. Aside from these NBFCs, more numbers that we're watching out for.
Well, firstly, Raymond, the revenues of the company were up nearly 12.5% on the back of more revenues coming in from the branded apparel and the garmenting segment of the company. If you see the EBITDA, that increased by nearly 33%, margins were higher at around 10.9%, while the net profit of the company jumped nearly 5 times due to sale of the Thane land, which happened in the current quarter, which was worth nearly 159 crore rupees. If you remove this Thane land sale, then the net profit profit was down nearly 4% compared to last year. In other segments, if you see the branded textile segment, the revenues were up only 2% on that front, while the shirting segment revenues was up only 5%. On the positive side, the company's debt, now that reduced by nearly 415 crore rupees in the third quarter of financial year 2020. CIAT reported an operationally strong quarter aided by benign commodity prices, which also aided the company's EBITDA. The revenue grew nearly 2% compared to last year, benefiting from high exposure to the two-wheeler and the passenger vehicle segment. The gross margins were also aided by the lower commodity prices. However, the higher interest costs and depreciation did impact the company's net profit. Syngenta International, the revenues were up nearly 11% compared to last year. Net profit was up 5.5%. Revenue performance was driven by strong performance coming in from the discovery services and the development services of the company, while the EBITDA was up nearly 2.4% as higher employee expenses put a drag on the margins of the company in the third quarter of financial year 2020.
Right, guys, thanks very much for that. So a slew of companies that you need to watch out for as we set up for trade this morning. Parthiv, let's talk about some of these smaller NBFCs. Credit Access remain a good set of numbers by AU Small Finance Bank. How have you read into it so far?
In a stressful times which we are now into in terms of the economy and in terms of the growth indicators, I think it's always better to judge a bank based on what sort of book it carries. And we know for the fact that out of all the three small microfinance companies or the small finance banks, AU is the best in terms of having the highest percentage of secured book. This is what we are seeing in likes of Ujjivan, where they're trying to increase their share of secured book, and as a result of which what we saw was that the provision coverage ratio did come down from high levels of 75 to levels of 60. So that was a point where I found that Ujjivan, despite the fact that operationally the numbers look extremely good, but overall I think the disbursements were lower because of key challenging states where we found a lot of problems. So I think it was a prudent move by the management. But nonetheless, these are companies which are quoting at anywhere between 5 price to book multiple to 8 price to book multiple in case of AU. So I think we are a little cautious here, even including likes of Credit Access Grameen, which in a microfinance lender has done extremely well. But at these valuations, Devina, there is no scope for any sort of miss going ahead in terms of increase in the credit cost or increase in terms of the stress in the book, which is always possible in a stressful economic times like these. So I would avoid these three counters.
Well, maybe some prudent calls as well on those. A bunch of other stocks to be discussed with Parthiv, but time now to get in our technical experts on board as well. Sameet Chavan, Chief Technical and Derivatives Analyst at Angel Broking, as well as Abhijit Phatak, Director at Definite Solutions, joins us on the show. Chairman, both of you, good morning. Thanks so much for joining in. Abhijit, I'll start off with you. I know you're bullish on the US markets. Does that translate into some bullishness for the Indian markets as well? Can we see some near-term bottom?
Yeah, good morning, Neeraj. Yes, in the short term, Nifty is very oversold, and with a stop loss below 12,050 on the spot, one can take a long. But I'm not sure about today because being expiry, anything can happen. But I mean, whether the rise can happen. But with a stop loss below 12,050, I expect a rise of at least 200 points over the next few days.
Abhijit, would the bank Nifty be a determinant for the Nifty to do well? Because that has largely, performed much poorer than the Nifty in the recent times. It's corrected quite a lot.
Yes, Bank Nifty can also bounce. Of course, I'm not sure how much, but 30,500 is a key crucial level on Bank Nifty. And if that is held 36,500, 36,600, I expect that to go towards 31 or maybe 31,200.
Okay, so playing for the bounce, not necessarily today, though. Keep that at the back of your mind because of the expiry. Sameet, the same question to you as well. What's your stance, and would your stance be maybe starting tomorrow because today is the FNO, the weekly options expiry?
Morning, Nivesh. See, depends. Honestly speaking, yesterday we were not expecting Nifty to slide below 12,180, 12,150, but we saw extended correction in the latter half, and Nifty has even tested sub 12,100 levels. So it has now entered an important gap area, which was created on 9 Jan. So on the low side, 12,080, 12,050 remains to be a very strong support. So in case of any decline towards that important support, even if it happens today also, we would be buyer positionally, and we would expect again Nifty retesting 12,200, 12,250. But if it opens flat, then probably first half an hour, 1 hour would be quite crucial. So we would observe how index behaves around those levels, and then we'll take a call. But in case of a decline toward that important support levels, we would be buyers. In case of Bank Nifty, it has been the culprit in last 3-4 days. It has corrected substantially and has slipped below its important support level of 31,000. So for Bank Nifty, it would be important to reclaim 31,000 again on a closing basis. So we would be closely tracking how Bank Nifty behaves around those important levels as well.
All right, let's talk about some individual stocks as well. This morning is going to be important, but also pretty risky in terms of the direction the market takes and if you get caught on the wrong side. But I'm sure our technical experts have it all sorted. Sameet, Chavan, let's talk about your stocks this morning.
See, we have a couple of ideas. Both would be on the long side. First one being Sun TV, which has given decent move in last couple of weeks, and this, rally is backed by strong volume. So that suggests that the stock has quite strength. And yesterday also, despite the broader market correcting, in fact, in last 3-4 days, the broader market has been correcting, and this stock has been maintaining its, sturdy structure. So from here on, we expect this outperformance to continue in case of Sun TV. It can be bought for a target of 504 to 510. This is our positional target. Stop would be around 472. Apart from this, the contra buy would be on Tata Motors. We believe that in last 3-4 days, stock has corrected substantially. It has now entered an oversold territory, reached its important support level of 185, 183. So we would be buyers in this decline in case of Tata Motors. 197, 200 is our near-term target. Can be bought with a small stop somewhere around 180.
All right then. What about you, Abhijit? What are the stocks that you're recommending?
Yeah, even I have two longs. One is a trend following long, which is an Exide Industries, which is in fact which has been very strong over the last few days. And with the stop loss of 194, I expect it to go to 210. In fact, it has not corrected at all, so it's showing strength. And another is a contrarian buy, which is SBI, which though it is a part of Bank Nifty, it did not face so much selling as the others. And with the stop loss below 309, I expect that to go towards 325, maybe before the results, because that is on the 31st.
Right. All right. Larsen and Toubro, and we've discussed the numbers. We've given you a breakdown of how it looks. But just to get a perspective from you, Parthiv, the stock's not done anything for an investor in the recent run-up that we have seen. You'd probably been a laggard if you'd invested in Larsen & Toubro, thinking it's one of the safer, larger cap names that will give you that kind of leverage in an uncertain market, but it hasn't. And the numbers, you've seen them. What is your take now on Larsen? Do you think that the aggressive brokerage targets of about 1700, 1750, will actually be met?
See, even as a matter of fact, the last entire decade, L&T, including the dividend yield, has given CAGR returns of 7.5%, which is not at all appealing. And that's even 100 basis points lower than what Nifty has done. But yes, attributing to the fact that it's been very challenging times for even the best of the infra executors like L&T. And in this quarter, what we saw was elevated working capital as a percentage of sales, which was coming at 23.5%. And hearing the management comment, the reason why they were not able to improve this was due to higher credits that they had to give to their vendors and a lot of subcontractors because of even further stress in deep down those pockets. And L&T always has a limitation in terms of how much of execution it can do on its own, because a lot of the execution challenges also came from a lot of states where there were change in the governments, and a lot of governments, the new governments, decided to renew the projects. So I think these are very, very challenging times and kind of not fair for even companies into such large infra projects. But nonetheless, still I would state that L&T is one of the most resilient infrastructure companies, and it's very encouraging to see that even in such times they've increased their order intake, and the order inflow was almost 10,000 crore higher than the poll, and a lot of it also came from the international markets, and it's always a good thing to have a share of international order book. But going ahead, I think they're guiding for 12 to 15% sort of revenue execution growth. If they can achieve that, I think at 15 times forward, these are one of the lowest valuations we have ever seen on L&T for a very long period of time. If at all the execution were to pick up and things on the ground level, the budgets from the state and from the central government were to improve, I believe the targets of 1800 are certainly possible for L&T.
The other set of stocks which will be in focus would be the PSUs. Yesterday they cracked so much on this follow-on offer from the CPSE ETF, FFO6, ONGC, Coal India, NTPC, all of them cracked. The question is, can they crack more or will they see some support? But this overhang of this ETF would likely stay on these stocks, so difficult to see them rallying from these levels. That's actually a key thing.
And as the budget comes closer, they're going to be more focused on how the divestment shapes up for some of these
Yeah, so the ETF
names,
would be
yeah.
a part of that divestment proceeds again, and if it's a large 18,000 crore issue, as we learn, then that could mean substantial.
The ho-hum around BBCL and
All of
Shipping
that too.
Corp and everything about getting private investors on board. All that also is something that's probably, the street is waiting, but it's not getting any kind of an indicator on what's happening on that front.
Yeah, it'll be important to see what happens there. Well, more on some corporate voices as well. M&M, more like a federation than a conglomerate, says Anish Shah, the CEO and MD designate of the company, was speaking to Menka at Davos, and he adds that he's not too keen to shut down or list the different verticals separately and rather focus on scalability.
I would first say that we are a federation, not a conglomerate. It's a very important distinction. And yes, I'm convinced on that, and part of my job will be to convince others why this is such a good model. As a federation, we don't get into details for operating companies.
Sure, each one
so
is
we
listed.
operate,
Most of them
each
are
one's listed from a governance standpoint.
Boards and your own management.
Their boards run them as well. So we, in some ways, more like a Berkshire Hathaway from that perspective. The difference, though, is there are significant synergies across these companies. So when we look at sourcing, which is a big part of the cost for auto and for farm, if that's done together, that helps them reduce costs quite significantly. If you look at the customer, for example, a consumer coming in to buy a car, in many cases, a consumer would go to a dealership, look at a car, select a car, then apply for financing somewhere, apply for insurance somewhere else, and then once they have a car, there will be other need from a maintenance standpoint. If they have to sell a car, they have to go somewhere else to sell it. What we're looking at is, can we synergize to do this across all our companies and offer the customer a seamless
But
experience?
that's still just the car universe, right? What's the connection to holidays? Or what's the connection to real estate? Or affordable housing? Or logistics, right? Those are all group businesses. So there is no apparent, tangible connection within the various businesses. I understand you're styling yourself like a large private equity fund or like a Berkshire. But do you see big value in that in the decades to come is my question. You've said yes.
So let me give examples of that,
Okay.
because that's the right set of questions. And you're right that there are some synergies that will be apparent for a consumer in a certain set of industries.
Right.
But let's look at your question around holidays and auto. Right? We were piloting an AI technology. We started with Club Mahindra Holidays for that. We were looking at AI to do digital marketing. I won't go into details of that in our conversation today, but that can really transform the way we can deliver value to customers. And the auto business, as I saw the results from holidays, took that and has deployed that today as well. So in the world today, we're going to see a lot of change happening very quickly. So our challenge is, how do we find best practices across our portfolio, be able to transfer them quickly. There will be learnings, there will be things that work, there will be things that don't work. And those are areas where, if we are focused on delivering value, that comes back to, can we deliver value, can we win in the areas we play in?
Okay.
That's how we would do it. And as you rightly said, those questions do exist outside. And part of my job is to be able to show real examples of where the real value was added to enhance value for investors. And hopefully at some point we can move from a discount on a conglomerate model to a premium on a federation model.
Okay, so maybe one of two ways that I can think that might happen is that if you separate out your auto business from the main parent company right now, whatever the nomenclature be, etc., where the auto business can then demand a valuation that's suitable to the auto business and not be suppressed in any way or boosted in any way by the valuations of the other business, and then you just have a holding company or an investment company that owns the stakes in all of this, and you don't particularly care how the share price of that company does. So that's one way to do it. The other is to see if you want to narrow your portfolio. The flip side to that would be the question, would you look to expand your portfolio either? So all of these questions to you.
See, for us, it's more around, the basic question is, can we create value? If we can create value, it's about how can we communicate it then in a way that people understand that. Spinning out a company or not, in some ways, is an artificial step. It essentially tells us that we have not been able to communicate that value clearly. The reason it's together, because there is greater value that is created.
Okay.
So that's part of our challenge. And as you ask about, are we getting into new areas? I think the question will be first, can we become much bigger in areas we are in today? We are in a vast variety of areas. Yes, there may be one or two things we would look at, but at this point I wouldn't say that we're going to go out and look at a lot of new things. I think it's more about driving scale in businesses that we are in And as we do that, that will enhance more value for our shareholders.
Well, that's the CEO designate of Mahindra & Mahindra talking about what could happen to the business structure going ahead. But 19 seconds, suffice to say, we'll start off on a flattish note.
Yep, and probably even dip into the red, if it may be, with regards to the overall sentiment and the mood in Asia, and also the results that have been coming out from the larger names, be it Axis Bank, be it Larsen & Toubro. Pre-open on your screens for the index, the Nifty 50 flattish, a slight positive bias is what you've got right now. Sensex opens lower by about 50 odd points. Coming to the big numbers then, and I want to quickly pull up Larsen & Toubro to see what that stock's doing in the pre-open session. It's down about 1% or so. So 1281 is what you've got for an LNT. Axis Bank on the flip side is at 730. That's gained 1.7% in today's session. So a 12-point bump up for Axis Bank. Let's see whether it holds. IndusInd Bank is the other one with gains of about 1.8%. ONGC, HDFC, Bharti Airtel are some of the other names that are doing okay for themselves. Kotak Mahindra Bank too has moved up beyond 1600. Reliance Industries has moved up too. Asian Paints, Tata Steel, BPCL, Bajaj Finance, Adani Ports are some of the other gainers. Losers then, Larsen & Toubro 2% now, as Z is down 1.9% and Ultratech is down about 4% Britannia, Power Grid, Tech Mahindra, GAIL are some of the other names that we're going to be watching out for. For the currency, a flat move, 71.21 to the dollar.
Okay, I'm sure you marked Axis, but just want to revisit RBL and Axis once, just to see what's happening to those companies. So should come up on your screen, both RBL Bank as well as Axis Bank, and then a couple of others mid-sized names as well. So this is Axis Bank, dips at least the first tick. Let's wait and watch if this lasts. RBL Bank, mixed views on the numbers. Let's just see what the stock is doing. Well, I don't think it'll be a 10% downtick, so let's wait and watch. And AU Small Finance Bank, good numbers. See it, very good numbers, so should come up on your screen. Watch out for those. And lastly, Credit Access Grameen, which Parthiv said was not too impressed with the numbers. Let's see what that one is doing in the session. Well, for now, flattish. Let's wait and watch what happens. But we have a battery of corporate conversations. Cipla is the stock in focus as well. The USFDA has classified its Goa unit as official action initiated. Darshan spoke to the joint president and global CFO, Kedar Upadhye, on the company's future plans with regards to this. Listen in.
See, this audit got over in September, and while this classification has been communicated to us yesterday, we have been on the job immediately after the end of the inspection. So in the last 4 months, we have covered quite a bit of ground. So we have submitted a detailed response to them in the month of October. Another update went in the interim, and the next one is due in a couple of weeks as we're speaking from now. So I think whatever actions we have committed for in terms of various CAPAs, the work is on, from be it product quality assessments, be it training protocol, be it select equipment upgradations, the work on strengthening standard operating processes and quality governance reviews and everything. So we remain committed and quite positive, and we're working collaboratively with the agency to address all these observations. I wouldn't hazard a guess on the next steps and the timing, because that is for the agency to determine. But as I said, we are working in a quite transparent manner and in a very collaborative manner with the agency.
What will be the cost of remediation of these plants? Will it be a large one, or you think that with the minor remediation cost, this entire plant can be turned around?
Yeah, it wouldn't cost much. Typically, the cost of compliance in itself is not very high. Unless the things escalate very significantly, which is not the case in this instance. There will be a lot of CapEx involved. We have hired a third-party agency who are leaders in this space, so a little bit of a professional and consulting cost. But I wouldn't characterize that as high at all.
Kedar, can you just give us details of this US plant that you have? What are the key products and how much % of the revenue on the total front, and how much of the US revenues does it contribute?
Yeah, see, every company does have what it called as a saying or de-risking program, and we also have been working on it from the last more than a year or so, in fact. So many of the big products actually do have a dual site, which has been already done. The CT30s have been already implemented. So as we are speaking, not more than 2.5% of company revenues is the contribution of single source products from this site. in the next 12 to 18 months, the near term, medium term, there is no major launch coming from this side as well. I think most of the important launches are concentrated in Indore and other sites. So I think in terms of having any material adverse impact incrementally beyond what we published in Q2 numbers, there is nothing much at this stage.
In terms of the US sales, obviously it's overall, if you're looking at it, it's just 2.5%, but your US sales is not a large chunk of your revenue. So based on the US sales for your US markets, obviously this plant is extremely important, right, Kedar? And that probably will be an impact that you will have to see on the US business.
Yeah, specifically for the US business, that's what I was saying, that most of the key products do have a dual site now. And that program has been running, and every company, as I said, has this dual sourcing or de-risking program. We have been running that for the last 1 year. So, and most of the impact, whatever marginal it had, is already part of Q2 numbers that we published. So I think incrementally, we don't expect anything materially impacting at this stage.
Okay, my final question, Kedar, is till now Cipla has had a pretty much very clean record against the US FDA. I believe this is one of the first plants in which there has been a little trouble or an OAI that's come in from the US FDA. Now generally, if you look at it, be it your competition, the data is for everyone to see that once a plant there is some issue, the US FDA then goes and inspects all the other plants of the company. Are you looking to upgrade systems or get in your quality checks to be much thorough and better at your other plants, and are you expecting the US FDA to come and inspect the other plants of Cipla also?
Yes, we have been, having agents check all the plants in a continuous manner as part of their calendar. And you would have seen our announcement in the last week where we received the EIR for our Phatak plant. And every plant has its own schedule of getting audited. So that work is ongoing. This is part of the business for us, and we do remain in a state of compliance and control across our overall system. This is part of the business. We have to stick to commitment on maintaining quality systems and compliance systems at the overall ecosystem, and we are focused on that, Darshan.
Okay, well, that's Cipla for you, and the stock under a spot of bother. Quick thoughts here. We just have about 6 minutes left for market open, so we'll make it very, very quickly. First, Parthiv, to you. Quick thoughts on Cipla and the move that has happened.
Unfortunately, Cipla overall has struggled to gain any major traction in the US business despite huge amount of inorganic money that they've spent for a couple of acquisitions. So that is, I think, my concern. And the inhaler division also has not really done well in the European market. So Cipla for me at this juncture is surely an avoid.
Okay, thanks for that quick thoughts. Abhijit, Phatak, do you track Cipla on the charts or the derivative positions?
Yes, Cipla has a support near 450, 460, but of course I don't expect any major bounce in that. It's not a very strong stock, neither a very weak stock, so I would also let it pass, but 450, 460 is the support.
Okay. Sameet, I want to come to you with a quick trading call on Havells if you have one.
See, this stock has already broken down from its major support level of 630, 640, so any minor bounce back toward that important resistance would be a selling opportunity, and we would expect the stock sliding towards 580, 575 over the next few days.
580, 575, so it could look slightly more weak. Parthiv, a quick take from you on the numbers posted by the likes of Havells, even Polycab for that matter. Major profit taking in yesterday's session, and KEA Industries also, which grew 25% revenues in the cables and wires business.
See, amongst all the three companies, we know for the fact that Havells has the highest premium multiple valuations. The only reason being their B2C is a lot higher. But that is what even likes of Polycab is trying to do. They're trying to increase the share of their FMEG business, and in which case currently the growth is very good, but the margins are a little thin to garner more market share. But I think at this juncture, purely on valuations and the way I think the numbers are looking optically in the cable and wire segment, even for Polycab, I think this dip in Polycab seems to be a good opportunity according to us. We find the long-term story to be very, very interesting. And again, I think in challenging times, they have been growing their cable and wire business with very, very healthy margins. And if the FMEG margins were to inch up going ahead and the share from B2C were to go up, I believe Polycab will get further re-rated from you.
By the way, for the end of the pre-open session, Axis Bank is up about 1.75%, 725. So Well, the market is probably not looking at the BBB and below book that seriously. Maybe the street likes a couple of points out here, but these might be early days as well. Let's wait and watch what happens to Axis during the course of the session. Parthiv, two strong numbers that came out, AU Small Finance Bank and CIO. Did you look at either of them on an operational basis?
You certainly, as we discussed, I think the best part about this bank is the share of its secured book, and I think the numbers are stellar. And no doubt, I think this is what market was trying to pencil in, because if we see the run of this stock, I think it has been fantastic. And quoting at around 8.2 price to book multiple, I think this is the most expensive quoted bank in the Indian stock exchanges. So I think deservingly so with such great numbers. But again, Neeraj, I'm always slightly wary of, very, very high valuation multiples, because one quarter where there's any sort of miss and we see this valuation getting derated, likes of what we saw in RBL Bank. So at this juncture, I think I would not suggest a buy on AO Finance Bank.
Okay. Stay on with us, gentlemen. We're just minutes away from market opening, and we tell you all that you need to know to stay ahead in trade today. Higher operating costs impact Axis Bank's third quarter profits. Slippages have risen on a sequential basis. The stock, however, at pre-open is up 1.7%.
Larsen & Toubro's profit meets estimates in an operationally weak quarter. The company's maintained its revenue and order flow guidance for FY20.
Among broader market earnings after market hours, Raymond reported strong top-line growth with an expansion in margins. On the other hand, RBL Bank's asset quality worsened on a sequential basis.
Minimal Enterprises says that the rights issue that ended on January 21st has been oversubscribed 1.14 times.
And the US FDA classifies Cipla's Goa plant as an OAI status. Management says it will have no impact on US sales.
Well, that stock 1.5% lower in the session. As I look at the Nifty names, Z corrects a little bit after 2 days of a strong move, but the PSUs, the likes of Power Grid, etc., continue to grind lower. So that's a pocket of stocks that you need to carefully monitor. A set of numbers that came out yesterday, Parthiv, Motilal Oswal Financial Services. We're seeing a lot of capital market linked names come out. Did you have a chance to look at those numbers?
The most encouraging part of the number was its housing finance company turning into positive, and that was the pain point for this entire group. And I think must give full credit to the management for working very hard on it and trying to turn it around. And if this company were to still, I think, grow at the levels that they have shown in this last quarter, I think then there is a scope for the valuation multiple at Motilal Oswal to get re-rated. No doubt the broking business, despite all the challenges, has been very stable in terms of its performance. The investment banking division did degrew, but overall I think one will have to wait because these are slight challenging times and a lot of competition is also there in that segment. So I would wait, not rush and buy at these levels.
IndiaMart and Nivesh is the other one. We spoke to the management in yesterday's session. They did say there could be a growth of about 15% but the upcoming 1 or 2 quarters may not be, as heavy with regards to revenue accretion or the deferred revenue accretion that they've already taken. But the stock was up a good 13% by the end of it. Parthiv, a quick comment on IndiaMart and Nivesh.
Honestly, I was extremely surprised to see the 14% pop on the stock, despite the management very candidly and very honestly talking about the fact that it's not going to be as rosy as we've seen in the past. And they've really tapered the expectations. And despite the fact market gave a big thumbs up, I think I was a little surprised. Again, I think these businesses could be tested, especially at a point in time where SME stress is building up. And they've struggled to kind of take their customers into the platinum and the gold category. I think most of the customers are paying at the lower end of the pyramid. So unless and until that inches up, I think further re-rating looks little dicey to me. So I would wait for a couple of quarters number before making any move in IndiaMart.
Okay. We've got a few minutes left to go for market opening. Let's just quickly get in some trading ideas and the stop calls going from our technical experts as well. Abhijit, what is it that you're going to be watching out as your top call for today?
Yeah, I'll be watching, like I said, Exide Industries to buy with a stop loss below 183 for a target of 210. And SBI, if it is not too weak, if it is not going below 310 again, because that is what it is acting as a support, that can go towards 325 in the coming days.
All right, Sameet, what about you? What's your top call?
See, despite I have given Sun TV, Tata Motors in my recommendation list, I have missed out one stock, Johnson Controls Hitachi Air. which we have been tracking of late. Stock has already given decisive breakout from its near-term resistance. Volume activity has risen substantially. So from here on, we expect 2300, 2350 in Johnson Controls can be bought with a stop loss around 2100.
Liquidity not an issue with this one, Sameet?
Probably yes, but around 2150, 2160, in case of a decline, you can at least accumulate the stock.
Okay, so accumulate stock, maybe not a quick in strategy that get in and get out quick. So keep that at the back of your mind. Okay, stay on Parthiv, but Abhijit as well as Sameet, take a moment to thank you both for joining in today and giving us your thoughts. We'll want to take in one opening thought from Parthiv before we thank him. But the market's slated to start off marginally in the green. The question is, with Asia looking a bit soft, can we succumb to some selling pressure? But here are the first trades. About 100 points for the Sensex, 0.21%. Nifty about 20 points, 0.13% or thereabouts. So very, very flat. The Bank Nifty too extremely flat. About to break into the red now actually. The Bank Nifty just hovering in the green. So just keep that in mind. Very flattish start for the benchmark indices. The mid cap and the small caps should also come up on your screen. Let's see how they are starting off. Marginally in the green for both the mid caps and the small caps. Actually the mid cap index is about nearly 0.25%. So it's not a bad start. The heat map. And let's see what's gaining and what's not. So Larsen & Toubro reacts positively, as the Axis Bank. 2% gains for Axis Bank. So both the results, which optically looked weak, have actually come out. Terms on open. Let's see if these correct. There could be a bout of short covering too in Axis before it starts correcting again. So let's wait and watch. IOC about 1.5%. Infosys up about 1%. ONGC, BPCL, Coal India. So yesterday's top losers because of the CPSE FFO, the follow-on offer, losers are actually now starting to bounce back, which is actually not a bad sign really. What's not doing well, Z, after 2 days of strength, corrects. Cipla on news corrects a bit. Bharti Infra corrects a bit as well after gaining for a couple of days. And there is some weakness in Power Grid though, which lasts. Last but not the least, keep an eye out on ICICI Bank. 2 days on a trot now. That stock has looked weak. Let's see if there is more in store. What about some other pockets? Companies which came out with numbers, companies ahead of the results today and how they are doing. So firstly, two strong numbers that I thought stood out for me. AU Small Finance Bank up about 3%, CIET up about 1.5%. So strong showing by both these companies in the quarter, and they are duly reacting. But what about companies that are going to come out with numbers today? PVR soft, RNAM not too much, and HDFC Life too just about meandering in the green, about 0.5% or thereabouts. But the markets have quickly slipped into the red as well, with the Bank Nifty leading the fall. Marginal, but in the red. Devina, what are you spotting?
We start taking a look at what's been happening in the broader market space as well. Taking a look at a few companies that reported numbers. So going to start talking about Credit Access Grameen. You've got AU Small Finance Bank that reported numbers. Credit Access Grameen, not all that good, but AU Small Finance did really well. Strong set of numbers, and the stock moved up about 3.5%. Raymond is the other one you need to watch out for. That too reported its numbers. I think that's up in the session, 2.7%. Vodafone Idea picks up today, so that's up about 3.5%. Then you've got the likes of Granules India, which is up 1.8%. Remember, they've approved the buyback. Prestige stays back in the green. CIAT is up 1.4%. Canfin Homes again today is up. Yesterday, the day before that, good gains on the stock. And today too, it was up 1% odd. Then you've got Natco Pharma, PNB Housing Finance, Amar Raja Batteries. These are all names which are gaining ground. Max India is up about 1%. Ujjivan Financial Services on the numbers too is up today. What's not doing well, ITI is down, Dish TV is down, Tata Communications, RBL Bank is down too after its numbers. Rallis India, Edelweiss is at 100. Aurobindo Pharma are some of the other losers. Market breadth tilted towards the positive side, but not a very big gap between losers and gainers. 659 stocks advanced, 442 stocks are declining.
Okay, Parthiv, just before we thank you, your verdict on Axis turns out to be true. I think 2.5% higher at 730. Would you be a buyer at these levels?
Certainly, I think my view for Axis is for the next 2 to 3 years. And Neeraj, I might sound very aggressive, but my sense is that this is a bank which I believe over the next 3 to 4 years can double from here. So we are very bullish on Axis Bank.
Okay, thanks so much for that, Parthiv. Appreciate you taking the time out and joining us today. That's the view from Parthiv Shah of TRACOM. Get in an important market voice. Harsha Upadhyaya, CIO of Equity at Kotak Mahindra Asset Management, joins us right now on the show. Harsha, good morning, and as always, thanks so much for joining in. Always good having you. What's your thesis, Harsha? I mean, the market is caught between commentary, which is largely bullish and bearish, and lots of opinion. And the earnings season 2 has kind of been a mixed bag thus far.
Good morning, Neeraj. I think clearly market is going to consolidate at around current levels and then seek for a direction from much awaited budget. We believe that earnings season is going to be more or less on the expected lines, which is a muted performance at the top line level and maybe higher than what the initial expectations were on the profitability side, simply because of the improvement that we are seeing due to corporate tax rate cuts. As far as overall market is concerned, I think there is a tilt that we are seeing in terms of most portfolios that is happening towards mid and small cap basket, and the reason is obvious. There is relative comfort in terms of valuations in this basket, and most people would wait for increasing their allocation to this basket until at least budget, I would say. And depending on what are the measures that the government would take, I think the confidence levels can be built upon that. Historically, we have seen budgets being more of a statement of accounts rather than any policy initiatives being taken. But this time, given the fact that government is trying to kickstart the economy once again, we may see some of the policy measures. So to that extent, I think the expectation levels are relatively high this time around.
If the budget doesn't do anything which dampens the spirit, I mean, inadvertently the FPI surcharge, etc., all kind of spooked the markets the last time. So let's assume the budget doesn't do anything to do that, stays within acceptable levels and believable levels on the fisc side, but doesn't quite do anything to materially kickstart growth because there is very little fiscal space. Do you think the markets would take that negatively, Harsha?
You are right. I think market understands that fiscal space is limited for the government. So to that extent, I don't think the choppiness would increase just because there are not immediate measures as such. But I think it'll look for confidence from a medium-term perspective, whether government is trying to restructure some of the issues which have been dogging our economy for quite some time. I think some of them, for example, have been ignored for quite long. Revenue expenditure for our country has been growing at almost 12% CAGR for the last decade, and today our nominal GDP growth is not even 12%. So there are issues in terms of some of these areas where hardly anything has been done by successive governments. And if we see some of those getting addressed, then I think it's going to have a medium-term foundation for a better growth and a sustainable growth. I think that's what market will look forward to. And also there have been cases where the taxes have been perceived as very high, or there have been double, triple taxation at various levels. So if they try to rationalize some of that, I think that can also bring back positive sentiments into the market, and that will help overall markets in our opinion.
Harsha, good morning. How much of a focus are you laying on anything material coming out for the infrastructure space from the budget? And do you feel that, in light of that, companies like L&T and the others which have been laggards up until now from an equity market standpoint could gain that much more if the orders start to come in?
Good morning, Devina. I think clearly for the last few weeks we are seeing some improvement in terms of order inflow momentum for infrastructure space. May not be so much for the listed space, but we have seen some of the unlisted entities participating and getting some orders. We believe that momentum will continue over the next few quarters. And obviously some of these segments, whether it is EPC, capital goods, engineering, construction, etc., these are all very, very closely dependent on economic activity in the country, and also the push that the state and the central governments would give, given the fact that private capex has been weak and is expected to remain weak for some more time. So to that extent, I think what comes out in terms of policies to enable infrastructure growth in the country would be critical for some of these companies to start showing better order inflow as well as execution going forward. But at the same time, I think this is the basket which is a lot more relatively attractive as compared to the consumption basket, where once again the demand setup is quite weak, but the valuations haven't been correcting given the fact that there is strong ownership there, and also the corporate tax rate cut benefits have gone more to the consumption sector because they were the ones who were paying almost full tax across the board. So to that extent, that part of the stock market has remained elevated in terms of valuations, and we find some of the cyclical economic activity linked sectors being on the lower side in terms of valuations, and that's where we have taken overweight exposure.
Okay. Telecom as a pocket, Harsha, now gathers that much more in prominence in whether or not starting to invest in a sector that has been, outright been the playing field of one or two larger players, and that's something that's going to probably happen if the government doesn't step in and gives a little bit of a loose end to some of the other players like a Vodafone Idea. Do you feel in light of that then, the ones that had been ignored up until now, Bharti, Airtel and the likes, will be the ones to focus on?
We do have some small position in the telecom segment, but I think still jury is still out in terms of whether it's going to be a two-player market, three-player market, or more than three players. I think to our mind, the critical part is whether in a B2C business, can you have 70-80% increase in tariffs and still expect consumers to use the same amount of minutes or data and have a larger profitability. I think nowhere in the world you have, the B2C businesses taking 70-80% increase and sustaining their volume growth and revenue growth, etc. Already we have seen about 25-30% increase in tariffs in India. To make some of the weaker players remain in the industry, remain competitive in terms of paying all the government and regulatory dues and also pay for spectrum, etc. You need this kind of a tariff increase, which to our mind is not going to happen very soon. And also, even if that were to happen, I do not think that the market shares would remain the same or the revenues would remain the same. So to that extent, I think we continue to remain cautious on the sector and believe that these are really structural headwinds. And on top of that, you also have at some point of time in future 5G coming in, which entails more investments into infrastructure and technology by some of these players, which again would be a business cost for them. And these are the structural headwinds that are there.
Harsha, I don't know if you turn bullish or selectively bullish on any of the large PSU names at all or no, but with the divestment getting pushed and these constant inflows of or issuances of the CPSE ETF or the PSU ETFs coming in, which stay as a technical lid on these companies, is it worthwhile to just sit out as a blanket call, because you might get it right in one, but you might get it completely wrong in some of the other PSUs?
Neeraj, you are right. We have been very, very selective in terms of our investments into PSU basket, only where fundamentals are reasonably strong and we believe valuations are on our side. We have entered, not on a top-down basis across all PSU stories. Our thesis has been until unless there is a fundamental change in the way some of these companies are run, and also, as you mentioned, if the overhang in terms of a continuous flow of offer keeps coming in, it will be difficult for some of these companies to really change their valuation multiple. So to that extent, we have been cautious. But fortunately, we have been owning BPCL and Concor for quite some time in our portfolios, and these two have been picked up for privatization. And whether it happens in the next few quarters or little later, that's anybody's guess. But at least these are the ones which are strong in terms of their fundamentals and their the way they run their businesses. And also they have been picked up for privatization, which augurs well for our portfolios.
Okay. Well, some important thoughts out there. Harsha Upadhyaya, I take a moment to thank you for joining us and sharing those with us today.
Thank you, Neeraj.
Well, that's the view from Harsha Upadhyaya. By the way, the markets are doing well. Nifty Bank is up 172 points. So we spoke about how it may find some support. Seems like it has. Let's wait and watch. The rest of the day could be materially different.
Yep, let's wait and watch. But coming up next, we talk about the FII interest in India with James Sullivan of JP Morgan and earnings with Vishwaveer Ahuja of RBL Bank.